Etsy reported first quarter earnings that had the stock price falling as a result. So in this video, I'm going to review Etsy's latest earnings results and answer if the dip in the stock price is a buying opportunity for stock market investors. Of course, Etsy was one of my top stocks to buy in 2023. So if you followed that recommendation and you bought Etsy stock, you would be down right now for the year. It started around $120. It's now trading at around $91.50. So let's review Etsy's earnings and see if this is a buying opportunity or if it's time to change my recommendation and cut my losses with Etsy stock. So revenue increased by 11% in the quarter to 641 million. Earnings per share decreased to 53 cents. That was down from 60 cents in the same quarter last year. Gross merchandise sales decreased by 5% to 3.1 billion. This is important because remember, Etsy does not own the inventory on its platform. It just brings together buyers and sellers and it takes a percentage of each transaction on its platform. That's one of the reasons why I really like Etsy stock in the first place, is because it runs an asset light business model. It just operates that platform and it takes a percentage off of each transaction, which has proven to be lucrative. Speaking of that transaction take rate, Etsy increased the transaction take rate to 21% in the first quarter of this year. That was up from 18% in the first quarter last year. If you look back over the past several years, Etsy has just been increasing this transaction take rate over the last 2 or 3 years. It's just been charging sellers on its platform more and more and more. And I'm sure sellers on Etsy's platform are getting annoyed. The sad thing is for sellers that they don't have anywhere else to go. If you look at Etsy, one of Etsy's competitors, eBay's transaction take rate has been doing the same thing. eBay's been increasing its transaction take rate higher and higher and higher. If you look at Shopify's been charging merchants more on its platform. Amazon's been charging merchants more. So merchants have been under attack by these platforms across the board, just raising fees, so they don't have anywhere where they can go where platforms are not raising fees. They just have to absorb these fees. What they could do is then raise prices that they charge to customers to protect their own profit margins. But that's another reason why I like Etsy stock for 2023, and I like eBay stock as well for that matter. Those two were in my list of top stocks to buy in 2023 because of this reason, because they're not competing with each other fiercely, right? They're both saying, okay, let's raise the fees. If you raise the fees, I'll raise the fees. And then if you do it again, I'll do it again. And then you do it again, I'll do it again. Let's just keep raising fees higher. That's good for us. It sucks for our merchants on the platform, but that's okay. We want more money. It's okay if the merchants pay us a little bit more. They get less profits, we get more. And so that's good news for investors and bad news for merchants on these platforms. Another good thing from the quarter, active buyers increased by 1% to 89.9 million. Remember, Etsy added millions and millions of new buyers during the early stages of the pandemic. Etsy was a popular place to go buy masks when we had to wear masks. Etsy merchants made custom masks that were very attractive to buyers. And the good news is that Etsy has been able to retain most of those buyers that they attracted during the pandemic. It didn't go up and then crashing back down. It went up and now it's just staying up instead of continuing to jump higher, which is good news. The gross merchandise sales per active buyer fell by 5% year over year to $129. That's understandable. Inflation is pinching consumer budgets worldwide. People have to spend more money on food, on gas, on rent. That's leaving less money for discretionary items like the type they buy on Etsy. And I suspect this will continue for the rest of this year. The macroeconomic outlook does not look good for Etsy and Etsy's business. However, longer term, I really like Etsy's business model. I like the asset light business model. It's profitable. It's got nearly 100 million active buyers, and competition in the industry is easing, right? They're all raising the transaction take rates. So I like where it's going. And I would reiterate my recommendation, and I would say Etsy is still one of my top stocks to buy in 2023. And yes, I believe this dip is a buying opportunity for investors who are looking into Etsy stock. All right, that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.